So as we know that basic definition of market is that it is a place where the exchange of goods and services takes place. So market basically define the total demand and supply of any particular commodity or a service. So we can define that financial market is a place or a group of institutions that facilitates the exchange of financial instruments and securities. The shares, the stocks, the bonds, the debenture, the checks are exchanged in the financial markets. And the price of these securities and instruments depend upon the demand and supply of these instruments or securities in the existing financial environment or the financial markets. So this is the basic definition of financial market. This diagram explains the working of financial markets. The lenders, the borrowers and the intermediaries are the three main components of financial market working system. And the lenders are the people or the business or the government bodies who have surplus funds, and they convert their money in various they invest their money in various financial securities available in the market. Whereas the borrowers are the people who need money. They borrow the money from the lenders through the intermediaries, and the intermediaries are various agencies like banks and other financial institutions who we can say are the link between the borrower and the lenders. So we can say that the working of a financial markets is a cyclic process where all the major constituents are linked to each other as shown in the figure. Now let's discuss the functions of financial markets. Number one, mobilization of savings. So financial markets enable the movement of funds from the lenders to the borrowers. It also helps in improving the investments, and the financial markets also help the lenders to increase their return on investments. Then second is the financial markets help in determination of price of securities. As we know that financial markets helps various investors to interact with each other, and this interaction enables the investors in fixing the price of various securities that are to be traded in the financial markets. The price of these securities may depend upon the market demand and supply of the securities. Then the third is financial markets provide liquidity to the tradable assets. So the financial market facilitates the easy conversion of the securities into cash. This also generates confidence in the mind of investors. Then the last one is it saves time, money and efforts. The financial markets functioning, which creates coordination between various components, help in saving time, money and the effort of both the parties, that is the borrowers and the lenders. And the financial markets may or may not be a physical location. The exchange of funds and securities can also take place either over internet or even over a phone. So these are some of the important functions, or we can say these are the basic objectives for which financial markets exist.